All right, well, welcome back to the iWealth podcast. It's Q2 recap for 2026. I'm with Shawn Pomeroy, and I'm also with JP Eckyn here in the office. And we need to talk about what the heck just happened over the last quarter. It's like we're in Minnesota and things are great. The lakes are open and golf courses are open and a lot of stuff is happening in the summer. But what's going on with this market? Shawn, I'll kick it to you. Just high level, what happened Q2 in your mind? What are you seeing?
Off to the races. Despite the fact that there is really no solution in Iran. Every week the headline is, that we're opening the strait or we're having peace and the markets go up, and a day later, nothing really has changed. There really has not been a change.
Yeah.
So we've got that going, and probably the biggest thing, or maybe second biggest thing, SpaceX went IPO.
Yeah.
It's now going to be in a couple of the major indexes.
Yeah.
But I think the biggest thing we've all got to consider is that White Castle closed their University Avenue location that was open for 89 years.
Oh,
so
did you get in for one last
I did
one?
not. I didn't find out about it until it was too late. Otherwise, I would.
Well, I didn't know that was coming today, but I did learn something. I mean, we're only a minute in and I already learned something. So yeah. JP, what about you? Like second quarter, just some highlights. What's going on?
It's, to piggyback off of Shawn's after the races, we watched Q1, negative numbers, and, now seems like sunshines and rainbows and everything's rebounded since then. Mm-hmm. Highlights are small caps and emerging markets, and it's been interesting to see emerging markets. Their 3-year cumulative has beat everything other than the NASDAQ. Shawn's SpaceX IPO, I was looking at a hilarious graphic of the top 10 companies and their earnings, and they're all green except for SpaceX. It was a
negative.
big negative number.
Yeah. It is interesting with SpaceX that, let's just talk about it. Like, I haven't received a call for quite a while from a client saying, hey, I want in on an IPO, or I want this stock or whatever. And what's interesting is the lack of research that people do. It's just a feeling. It's a hey, I need to get in. It's a herd mentality. Everybody's buying or watching TV and they're saying buy it or whatever. But I mean, did you get some calls, JP? And then what was your,
Yeah, I had a couple clients call about it, and my conversation around it was, you're not investing in SpaceX for today at all. Like, what you're buying it at, the valuation doesn't maybe make sense. Now, could I say the same thing 10, 15 years from now? You're investing in a person in Elon Musk in my eyes. And so if it's something that you're okay with possibly losing, then sure. And it's long-term money, sure. But if you look at, historical IPOs, they haven't done the best.
Right.
If you take a look at Meta, where that started versus where it finished a year later, not a great result. If you look at now Meta 10, 15 years from now, obviously it's done well.
Right.
Which most people then would bail out.
Mm-hmm.
They wouldn't wait that long.
They wouldn't wait that long.
Yeah.
So if it's truly buy and hold, I get it, but it's going to be so long. Yeah, I did. I got a few. And for me, the big thing was, clients know the realistic expectation is you can't buy it at the open, even if you tried, right? The couple platforms where it was available failed. Exuberance happens in the open, and then the numbers start to come out, and the real investors start to piece the data together, and it drops.
Yeah. It's so interesting because we can't have a buy-sell signal on that stock, but we can help clients think about it. It's the behavioral finance. Why people pay us to work with us is because we're going to help them think maybe differently. And so with experience and what we've been through, only 5% of the stock was let go. 95% of it was tied up with inside shareholders. And so you only got 5% trading, and you saw this big run out. Someone told me a stat the other day, and it's probably not true anymore because it's 2 days old, but if you weren't in the first 10 minutes, you're underwater in what you purchased with SpaceX because of how it ran way up and now it's run back down. I talked to one person, and my was, if you're really going to buy it, you can buy it. That's fine, but maybe you should take a look at putting half in Tesla and half in SpaceX, because I tend to think that maybe Tesla owns or gets bought by SpaceX so that Elon can have his control and doesn't have to fight on raises and everything. Like, he's got this nuclear option in SpaceX. Like, they can't get rid of the guy. He's there to stay. It's not a Steve Jobs thing over. And so Yeah, I mean, again, we don't know particulars. We don't get into making buy-sell recommendations on individual stocks very rarely around here. But the behavioral thought process around it, which is so interesting, and why do you want to buy it? And asking clients that, and it's, well, my neighbor said, or the TV said, or
is it a pull tab?
Yeah.
You're just trying to scratch an itch for that pull tab feeling of success.
Yeah, yeah. And Amazon didn't have earnings for a long while, and now they have earnings. So to your point, JP, 15 years from now, it could be a different story. You just want to be careful of overreacting when these things happen, right?
Yeah, because you might not get that pull tab reaction. You might get, what pull tabs usually provide is a bunch of losers to begin with. Eventually it wins, maybe,
right.
But not, It's going to take some time.
The big thing is, where does it fit in your real big enough stake in it to make your goals?
Right.
So what is it? What's its real job?
Yeah.
And if it's just short-term excitement, there's a lot of other ways to do it.
Yeah. SpaceX, Bitcoin, like crypto, like they're just, it's just, we're just going to make a bet and see what that bet does. You had said something at the beginning, Shawn, about there wasn't a lot of change, but I did notice this. I went to the gas station yesterday, and premium was $5 a gallon. Bread is 3 times what it was. Like, we are seeing some inflation. Now, they haven't come out in the numbers. I don't have the real inflation here, but they really haven't come out high, but yet it seems like it's affecting everybody.
And yet, some of the biggest growth in earnings for companies in years, right? The American consumer is willing to pay more and keep doing it.
Mm-hmm.
Where does it run out? Where do we stop? Where do we not pay $4 for a loaf of bread?
Yeah. What's interesting is one of the managers that we use shows a chart of demographics in America. And 60% of Americans represent like 80% of the spending, or maybe it's 90%. I'm going to get these numbers a little off. But 40% of Americans are real. And so it's that upper level, Shawn, that still have money left over from COVID or whatever, where they still have money to spend for a while here and continue to keep things going. Are you hearing anything on the inflation front?
Yeah, I mean, we see it, right? But back to, what big banks, economists are saying, that the consumer is resilient. I just saw a stat today that was there's still $7.8 trillion in money market funds.
Right.
Still way higher than, when we go back and look at 2020. So, where that money's tied up and whether those consumers keep spending that or have to dip into that to maybe bridge us into getting this inflation down, we'll see. No solution with the straight. Oil is down 40% from its high. Right. I mean, I know it went up. Went up again today, and it's but 4%. Nothing's changed, but it's
daily sentiment or something.
Now it's not in the top of our mind as a new thing, and
sitting in money market. We also have to remember that that's the 40% of the people that Brad said are affected and are squeezed right now. They don't have that money market.
No, it's not in the money.
They got a credit card.
Mm-hmm. Right.
They've got real issues to try and keep their finances going and healthcare costs. I just spent some time in Scotland with my son and had a wonderful trip. And I was expecting a lot of presidential things, right? The for or against and where do you sit. But what I thought was interesting was a lot of the people that I talked to were very aware of our healthcare system and the difference between ours and theirs. And, you could say, well, ours is more expensive, but we get paid more, or things like that. What was unique was the things that we purchased there, I believe, were less expensive than here. And I didn't tip there.
Yeah.
They were paid a living wage.
Mm-hmm.
I didn't have to roll out 20% extra to try and help that person live. And then they had health care. And it's, so it was some interesting dynamics. Like I said, I expected more of the what's your president doing or where do you stand on this or that, but just the general populace that knew about some of those fundamental things right now that I think are going to be a challenge for us.
Yeah, for sure. Like Medicare, talk about Social Security, like Medicare is really, really broken. versus Social Security. Social Security is broken too, but Medicare is really broken.
Yeah, but it doesn't get the press.
How do we handle? Yeah, how are we going to handle it? And then it doesn't matter Democrat or Republican. Somebody's got to tackle this at some point. They continue to kick the can. Both sides do, and it has to happen. You had brought up the money in the money market account. So S&P and Dow are up 10% for the year. Small caps up 21%. There's also a risk to leaving your money in cash too.
Oh, absolutely.
How have you talked to clients about that if they're sitting on some cash, Shawn?
They have to realize that the dollar they have in the bank today is not going to buy them as much stuff tomorrow. There has to be at least CD rate savings. There has to be something that tries to beat or meet that inflationary pressure. We're kind of lucky today. I mean, CDs, you get a 1 year, 2 year CD, maybe you can get 4% still. Up a little higher than it was maybe 6 months ago. A bunch of the feds that vote are talking about maybe the Fed rate goes up by the end. They're looking at the inflation stuff. They want to kind of tone that down. But yeah, for the individuals, I think that you need to have savings. You need to have that first line of defense about the timing of things that go weird in your life. But after that, you need to have it doing something for you. You can't have that much cash sitting around. Yeah. It's got to be getting you a couple percent or you're losing.
Yeah. Somebody walks in today, JP, a client of yours, and they have $100,000 in a cash account and say, what should I do with it? What are some of the questions you're asking or trying to figure out before you give them advice, and what's that look like?
Yeah, first thing is kind of gathering inventory of where everything's at. Is this truly the only cash that you have, or you've got some sort of cash equivalent elsewhere, and then really taking a goal-based stance that we always talk about. What is this for? And even with the S&P being up 10% today, one of the most surprising stats for me after quarter two is that based on price to earnings, it's cheaper today than it was January 1st. So
what do you mean by that?
So market's up 10%. Call it 10% inflation. It's gone up 10%. And based on the prices of stocks divided by the earnings that they're producing, the market is cheaper today than it was January 1st. That was one of the most surprising things. But it goes back to kind of what we talked about during our Q1 update, Q2 update, that price is going to follow those earnings.
The other interesting thing, I think, is that it's broadening out a little bit. We're having this real cyclical approach to when it's the AI stocks and those top, Mag 7, Amazon and Google and all those. And now it's starting to broaden out again.
Yeah.
For the first time since 2022, I read a stat that was the equally weighted S&P 500 outperformed the market cap S&P 500. Right? So we're getting more of those companies are participating in that share price going up and the earnings going up than just those few that are selling chips to Taiwan or Taiwan selling them to us or whatever.
Right. We're also seeing a rotation internationally. We're starting to see some portfolios do better international. It's been a while. We're seeing some managers go a little bit heavier in international. They're being specific on where they're going, but we're seeing a little bit of that too. And you bring me back to a comment we've talked about before in this about being in an equally weighted versus just an S&P. A lot of people don't understand that it's not equally weighted, JP, when you just buy the S&P index that's out there. And all of a sudden you got 40% of your money's in technology stocks versus equally weighted where it's 500 equally. So I'm glad that you brought that up because sectors rotate, things rotate. Small company stocks had a great start to the year, up over 20%. We're up 10% on the overall market. What are you looking at, JP, going forward, like this next half of this year? What are you really trying to pay attention to when it comes to the market and what people should be thinking of?
I think one of the big ones is that the economists that we follow have talked about is, can we maintain this oil price below 100? I think we talked about this the last time too, but those prices are just going to bleed into everything. Everything at Walmart, that bread that you talked about that's up, that got transported there. So there's transport costs that are involved with that. Every single event, everything that oil cost is going to bleed into. So really looking at staying under that $100 a barrel. And then where do we go with these inflation numbers? Are we increasing the Fed rate by, 2 25 basis point increases? Is it 1 25 basis point increase? And how does the economy absorb those changes? Because at the beginning of the year, we were talking about a possibility of 2 cuts. Right. And so that's probably been one of the biggest changes.
Well, you got Trump's new Fed guy in there, and Trump wants it cut. Mm-hmm. And now they're talking about raises, so it'll be some fireworks. Right? Yeah, it'll be some fireworks going on. Yeah, I can't wait for the Twitter account to come out now on that. Yeah, what are you looking for? I agree with the oil, like you're right, transportation and all the stuff that goes into it. But there's also a flip side. There's people that make money when oil goes up, and so it's being diversified in those investments too. But what are you looking at this year, Shawn?
I would say continuing to watch employment, and starting to see, if employment trends continue to be positive or whether they, because that's going to dictate how much money people have to spend. I'm a firm believer in, if McDonald's raises their price $1, their sales probably don't go down because the people, they got 1 hour to get through the line and back to work, or they're on their way someplace. And Americans have shown that travel and memories are far more important right now than their cash reserves. You look at the airlines, so yeah, we had one go broke maybe in Q2 and disappear, but the other ones are having a great time, great years, even with higher oil prices and stuff like that, and higher ticket prices. People are switching over to that idea of I want memories instead of working 80 hours.
Yeah.
And so employment's going to be a big thing, I think. And like JP said, just watching the oil price and watching where earnings per share go and whether or not that creeps into a slowdown or, whether we would see a pullback or a correction or something like that.
Yeah, it's really interesting. I need to remind everybody too, we outsource a lot of our money management, and we do that on purpose because we don't believe that we have to be the smartest person in the room. We can hire really good firms to help us do that. Our job is to oversee those firms, pay attention to what they're doing, the changes that they're making, what are they looking for, what are they talking about, and it's really important for us to make sure our clients stay diversified, that they stay focused on their long-term needs, on their goals, and that they fund those goals. If part of it is memory dividends to go to Scotland with your son, then set up an account and fund it so you can go make that memory dividend. That book Die With Zero, I think, has got everybody going with these memory dividend type things. But I think it's just really, really important to know that we have to have an opinion. We have to pay attention. We're not going to make the market, but we have to help our clients make smart decisions with their money. And so we spend a lot of time. We're meeting at noon today with the rest of our team just to talk about these type of topics and other planning topics and how can we help our clients. And so we just need to stay on top of that. But it's our job to make sure that we talk to our clients and let them know what we're thinking about and where we're at. When we come to close this kind of conversation out about second quarter, we talked about what are you paying attention to. You had talked about oil. You had talked about unemployment. Is there anything else as we wrap this that clients should be thinking about? Are you hearing any rumblings about layoffs with AI or anything like that? Or should anybody be paying attention to any of that stuff, Shawn? Are you hearing much? Or
locally, I have not heard that. I think that Main Street, smaller rural businesses are still hurting a little bit. There's not as much being purchased in our small towns. We need to get back to that. Main Street, keep it local mentality. But no, there hasn't been any really big, significant thing. And I attribute that when I'm talking that we've done a good job on focusing on their goals. That we're not creating these pockets of accounts or things like that aren't tied to something and don't have a purpose.
Sure.
We can look at things and say, what's changed for you? Now let's look at your portfolio and see if we need an adjustment instead of just a headline or anything like that.
Yeah, that totally makes sense. What about you, JP? Is there anything that you're, hearing or anything that's on your mind as we kind of...
Not headline, what I read today was the AI has not began to replace things yet, or people yet, excuse me. So continuing to watch that. Heard there's some record low kind of labor force participation, which could be good from an inflationary standpoint. More jobs for those who are participating. That might keep that unemployment number stable. So even though there's maybe less jobs, it's because people aren't participating.
Right.
So keeping an eye on that. I think earnings are going to continue to be key. We've talked about some of the Mag 7 numbers. Take a look at what Microsoft's done this year. Not good based on what they're spending in AI infrastructure. Now that benefits other companies in the economy, but it is expensive. Where do earnings, how does that affect earnings?
Yeah.
And, as we look at other companies, do earnings continue to go up? Or do we see some staggering out because there is a lot of spending?
Yeah. If they start issuing bonds, which is debt, to pay for those AI data centers, you need to pay attention to that too, for sure. Yeah. So, guys, on your end as clients, or whether you're working with us or somebody else, like as life changes, your responsibility is to let us know so that we can help you. So, if there's a life change of some sort that's going on, just please reach out. We're here to help you and take care of those type things. But hopefully this gives you some insight into what we're thinking and what we're seeing, and we'll see you back here again in another quarter. So have a great day.